Hello, 4-year journey followers. I hope you're doing well. This is Bob Lucas on Friday, February 14th, 2020. This is another installment of the 4-year journey video. Last one was done 5 weeks ago. That last video covered my views for most of 2020. And a lot of what I'm going to cover today really is a lot of the same ground, but I'm going to respond to some of the questions that were received around sort of where we are now, a month or so later, whether we should be buying or whether we should be selling, what the exit strategy might look like. A lot of discussion, a lot of questions on altcoins, which of course is fitting because so many of them are rallying and maybe you're not involved and you're worried that you're not making enough money. And then I'll talk briefly about security, Multi-Sig, and how I recently moved my HODL position from a single hardware wallet like a Trezor to a multi-sig solution. Okay, here come the disclaimers. This is a free video. I do not look for any sponsorship or any endorsement. I don't have a link for you to click on. There's nothing to be sold in this video. Anything in here is not financial advice. What I'm trying to outline here is how I approach the market, how I'm approaching this opportunity and this investment for the long term, and I'm sharing with you my approach and how I am going to go about it. What you see here is pretty much all recorded in one stream over one session. I pretty much don't have any real glossy research or charts to show you. I just go with the flow, so to speak, and speak directly to you. So that said, this is what we'll cover today on the agenda. And let's get started with the update on the 4-year cycle. This video is not intended for short-term analysis, but it's important to frame the current market because in the last video I talked about the decline, the bear market, mini bear market from the June highs down into December. The 55% decline I talked about in early January, that I thought that this decline had ended with a 75% level of certainty. I can now say that it has ended with a 100% level of certainty. Not to be confused with me saying that the massive bull market scenario is 100% in play. What I'm saying here is that we've ended this decline. We're now in a new uptrending market, but there are no guarantees as to where that uptrend eventually unfolds to, and I will cover that shortly on the weekly chart. But on the daily chart, what's important to understand is that we have an extremely right translated 60-day cycle currently in play, but more importantly, we have a breach of the prior cycle high, which also was on just very fast wicking action. All the price action really is up in this 92, 9300 area. In any event, we have spent a considerable amount of time in this area and also above the peak here, which means to me that the trend of lower highs, as you can see here, has ended. We are now also, because this is such a right translated cycle, we're eventually going to see a shakeout. I don't know where it comes from. I don't know if it comes from a move higher over the next few days or not, but this cycle low is overdue. That may come on a lower price point, it may come on a higher price point. The point is that we are due a pullback of some type. Pullbacks in an uptrend or a bull market can sometimes be very fast and sharp, but sometimes just appear to the naked eye through a sideways consolidation chop. The point there is to say that we are now in an uptrend. You don't get out of the way of a potential short-term move. You don't try and time a move like this. You don't try and short an uptrend. You short a downtrend. When it hits a peak, you buy the dips in an uptrend. So what we're looking for here is, obviously we should already be fully 100% allocated to Bitcoin and spot, and the only looking here to add if that's kind of your outlook and what you want to achieve. You should be fully allocated here and ignoring any downturn that you may see over a short period of time. Also, the weekly chart here is as clean and as clear as you're ever going to see. This downtrend from June, it was pretty obvious back when I did the last video that it had ended, which is why I gave it a 75% possibility. But no matter how you draw any of these trend lines, whether it's from the wick or from the body of these candles, we've cleanly broken higher. We have some significant separation on the weekly bars between price and the 10-week moving average. The 10-week moving average is a fairly slow turning average. And typically when you look at it from Bitcoin's 10-year history, it's a pretty good indicator of trend on an intermediate and also longer time frame. So as you can see from here, the 10-week moving average essentially was down the whole way and turned with and confirmed with the high volume big price bar here. And same type of thing here. You see the confirmations here on the downside. You see the turn lower. And now you're seeing the same thing here with a confirmation bar right here, a break of the trend. This downtrend has ended. It, for me, has always been a reversal to a upward mean here. The 2008 cycle low, or the 4-year cycle low, price shot to the upside here rapidly for many reasons discussed in previous videos. It's a pendulum swing back now to the mean, and now we're going to continue along the same kind of path that I outlined in the original 4-year cycle video over a year ago now, and also in the follow-up video since then, that we were looking for price by the beginning of 2020 to be around that 7, 8 to 9,000 level. So even on those videos, when you look back, we are ahead of that point that I thought we would be in a 4-year cycle. So when you think about that, you know, it's easy to get caught up in these declines and think the worst. It's easy to look at this move and know that you probably weren't involved, and again think the worst. But the reality is, from a 4-year cycle standpoint, and when you look at this structure here and compare it to, and compare it to previous bull market structures, it's pretty similar. How price wiggles around over the shorter time frames, you can't line up, and you shouldn't try and line up. No two market is identical. But when you widen the lens and look at certain pivots and certain price points, say over a quarterly basis, and then of course over a yearly basis, this market now begins to, in many different facets, resemble the prior 2 4-year cycles and where they are and how they're progressing. So for that reason, this 4-year cycle, let's call it a prediction or viewpoint to being a right translated cycle that would do 10x and 20x the prior cycle like it has done before, is simply saying that the last few cycles went in a similar way, and we are therefore expecting this cycle, the next 4-year cycle, to do something similar. And we can say that because we have obviously history behind us, but also the fact that Bitcoin and crypto in general, from an asset class standpoint, is still very insignificant, with very little of traditional finance, or very little of traditional money and capital that's been allocated to this space. People are talking about it, people are looking at it from a potential outsized gain opportunity, but really, and I can tell you this from my own personal experience in here in New York and dealing with a lot of people, that it's really just a drop. It's just a drop in the bucket right now. But when it begins to get some more of the attention, when it begins to make new highs above 14 and then above 20, there will be a flood, there will be a rush, and it may not be as much retail this time. It may well be some significant institutional capital that drives this higher. But my point is that some people are worried that this peak here in 17 was the super peak, and that we're now sort of in this some type of 3-wave or ABC type structure correction. Not that I know what that is, to be perfectly honest with you. But I don't believe that. I like to see assets move over 4-year cycles and then over a 16-year time frame, 4-year cycles, complete one super cycle. And I think now we're in that third 4-year cycle here, heading up to a real massive explosion over the remainder of this cycle, and that's where you get a peak of more significant, significant nature that I think will, going forward for their results in a pretty significant bear market. But there are no guarantees in investing. If I was 100% sure and I had the evidence to back my view, then I would allocate way more to Bitcoin than I'm already currently allocated. There is risk in everything you do. And the fact that Bitcoin's, this outlook at least that I share, which many other people share with their own models, and a similar viewpoint that Bitcoin can reach excuse me, a 6-figure price point over the next couple of years. The fact that that offers such a tremendous upside opportunity means you don't need to actually risk as much. I'll cover that again in the exit strategy shortly. Point here is that we don't need to go crazy with our allocation. The gains, if we are correct, will take care of themselves, but we have to also focus on the downside risk and the downside possibility. Fortunately, though, I think this bear market here within a bull market trend or a secular bull market trend gives us a very unique opportunity to define risk, in my opinion, again. What I mean by that is we didn't see 55% corrections in the prior cycles. So a lot of people are scared of this cycle here, thinking it can't go to new all-time highs purely because we had something like this in what was supposed to be a very bullish market. I don't see it that way. For me, again, this was a pendulum swing. We also didn't see 300 or 400%, and let's look at that real quick here. We never saw a 359% rally over 12 weeks early in a 4-year cycle as well. So we can't look at one decline in isolation without looking at the the cause and the effect scenario together. This to me is just smoothed out, and price is smoothed either side of these the rally and the decline. So for that reason here, this December low becomes very, very important. We now have enough separation from that point. We now have our second uptrend in this new 4-year cycle that it would just not make any more sense. It would not make any sense at all at this point for the market to reverse itself 13 months or 14 months now since the last 4-year cycle low, to reverse itself now and to make on a weekly or a monthly, to make a move below this candle right here. To me, anything, and that's still significantly below the current price point, but from 6,400 area, anything below that level to me is a danger point. And I actually would be probably taking some off the table. Again, my allocation is at the level where, as I've said before, I'm willing to lose that, or at least not make any money on that, or maybe give some of that back. I am in early, granted. I need to get, price would have to go below sort of 3,000 for me to start losing money. But the point is, not everybody's in that same position. And I think this December candle offers some downside protection. Doesn't mean you can leverage up a little more now knowing that, but this does, I think, provide a floor. If we get price below that level from this point here forward, I don't think it stops there. I don't think it reverses there. I think it just goes and keeps going lower, and that becomes a left translated cycle that I've talked about as the downside potential. So this here becomes the peak only 6 months into the 4-year cycle, and then that we spend the remainder of the 4-year cycle mostly going sideways, probably even getting below these December lows at some point. Maybe not, I'm not talking about an end to Bitcoin by any means, but I'm talking about this 4-year cycle essentially chopping between maybe a $2,500 price point and maybe even a $10,000 price point. Doesn't mean it couldn't go back higher in the future. That's the downside scenario I've talked about for the longest time. What's different here today that I'm sharing with you is this December low. So that's the downside risk, that's the downside point, but I don't see that at all, to be honest with you. What I see here now is this continuation pattern. For as far as I'm concerned, this is still the exact same analysis, the exact same feel as I had over a year ago in the first video. Nothing for me has changed, even though we had these gyrations. And if you're stuck with the 4-year journey during that period, then yes, you would have held through this. You would have been in early, but you also would have held through this, and you would have been calm and collected. And now we're sitting at 10,300, up, 100% or even 200%, depending on where your entry is, of course. Point is, though, you got a taste for volatility, some FOMO, some fear. You got a taste for what you're going to get and what you should experience in the future when price, again, if it does follow the 4-year cycle that I'm expecting, you're going to see all those emotions again, but multiplied by a factor of 10. You're going to see, when you saw this move to 14,000 over 12 weeks, in the future, you're going to see toward the tail end of a market possibly $5,000 and $10,000 and $15,000 daily moves in Bitcoin, because it may be a 6-figure price at that point. So moving by 10% in a day, moving by $10,000, you're going to be exposed to that, and you'll need to be prepared with a plan to know how to handle that. And same on the downside. There may be a $10,000 declining day, or there will be a $10,000 declining day if Bitcoin is up in the 6-figure price point. So the second point on the agenda, buy now. I get that question a lot. Should I buy now? Should I buy now? Well, I don't know where the hell you've been after all this time. All my videos have said from the beginning, don't be a short-term timer. If you're in this for the long haul, then you shouldn't be looking for optimal entries. You're playing around with $1,000 or $2,000 in price, risking the market getting away from you and never being able to get the allocation you had hoped for, or getting an allocation at a higher price. Now, sometimes, yes, it does work best for you. It does work well where you waited and you may have gotten a better price. Good luck to you. That's great, but that's really not the idea behind getting into the market, getting your exposure, and focusing more not on the price that you got in at, but how you're going to how do you get the right position? How do you hold that position up towards the point of exit in the future? And then all the preparation that goes into preparing for that inevitable day in the future. So I guess clearly what I'm saying here is, don't ask, was it now a good time? Yeah, the market is a little extended on the short time frame. Yes, it could drop 1,000. It could even drop 2,000 over the next 5 days. You could be watching this video in 5 days' time and price could be at 8,300. I wouldn't be surprised. But I also wouldn't be surprised if Bitcoin's at 12,000. That's just the nature of this type of asset class. When you're dealing with volatility, at the 80% levels and 100% levels, anything is possible. Anything is possible. We could be looking at Bitcoin at 20,000 by the end of the year. You just don't know. Again, you could be looking at it at 7,000 by the summer still. We just don't know. We need to get the position and be allocated. So if you're in this, if you see the long-term potential, if you're looking for Bitcoin at those higher price points in the future, then you just need to get your position and hold it. Okay, moving on to exit strategy, the number one question requested for this video. So this one here is not a chart. This is just me speaking very freely right now. The fact that exit strategy was number one requested question here tells me that everybody is already thinking about the riches and the prize and making money. And that to me is concerning, because you're not focused on the process. You're not focused on what it's going to take to get to the exit strategy. I can tell you the numbers that I'm focusing on, and they're already on the website, 4yearjourney.com. They're already there. It's a spreadsheet. The first one is at $28,000, which is low, some people are going to say. But I'm going to take some off the table at 28,000 if or when we get there. And that's going to make me feel better about my overall allocation, because I'm going to bank at 28,000 enough to cover my investment, and I'm pretty much going to be riding with, let's call it, the house's money, right? But I want to circle back to why everybody keeps asking about that. Price is only at 10,000. We've just come out of a 7-month, 55% decline bear market, and everybody's already talking about how they're going to make and where they're going to make their money. There's plenty of time for that. There's plenty of time before you get to the point where the 4-year cycle top is in play. Again, all depends on this bullish, right translated narrative. But the fact that everyone's asking means that you're focusing on and focusing on the absolutely wrong things at the moment. Focus on the right size. So everyone's thinking about where they're going to take some profit, and they're probably already calculated and invested way too much more than they can possibly afford in theory, and they're hoping for massive gains, outsized gains relative to their portfolio, relative to their investment and what they should be investing. So the quick answer here is my first strategy is 28,000. I'll take 5 Bitcoin off the table of the 30 I have allocated to the HODL program. And then from there, I'll wait and see. Most likely, I will take another 5 Bitcoin off at $56,000 level. $56,000 represents nearly a $1 trillion market cap for Bitcoin, and I think that's significant to the market. I think a lot of participants in Bitcoin value the Bitcoin network in US dollar terms. I know a lot of Bitcoin maximalists and purists want to think that 1 BTC always equals 1 BTC, and I guess to someone it does, but to the people that we feel are going to drive adoption or drive the new money influx and inflow into this arena, they really care about their dollar allocation to this asset class. They don't necessarily care. Actually, they don't care about how many BTC they get. If somebody has, $50 million to allocate, they don't really care what the nominal amount of BTC is. They care that they have $50 million worth of Bitcoin exposed and what their potential profit is, or what percentage of their portfolio that 50 million may represent. So I think that 1 trillion level is important. But beyond that, beyond that $56,000 level, I'm probably going to be going more to a trader's mindset in terms of where I feel I want to be taking profit. And I got to be honest with you, I'm probably going to be doing at certain points, if I see the market offering me an opportunity, I may even be buying back in some of that. If we get 30% retracement right on the money for a 60-day cycle, I'm probably going to be buying some of that back. I mean, I'm not going to be doing that on this channel with YouTube. I'm just going to, this is a buy only, sorry, a sell only going forward. The allocation's full. It's just going to be a reduction all the way up. But I may not personally be doing that in the future. I can't sit here on YouTube and play that game, of course. That's not advice. But from a selling standpoint, at least, from offloading, 56,000 makes sense. Beyond that, it's going to be a 6-figure number, I would think. Of course, I would have certain risk levels that I would probably take money off the table or even get out completely. So if we're up at the $28,000 level, I may even have a stop point down at the 18 or 20,000 level, something where I feel that in a 4-year cycle uptrend, similar to previous uptrends, price should not be reaching back down at that level. Now, the stop would be very, very wide. It's not designed to be sort of this immediate trigger. It would take a considerable change in the price action structure over a weekly chart, even a monthly chart, to trigger something like that. But it will be important on the way up to have some really wide view of where we're wrong or where the trend higher has probably ended. Now, I'll talk about allocation real quick, even though it's not mentioned right here. I get a lot of questions on allocation. As you know from prior videos, this is only about a 5% allocation overall. I'm not going to tell you exactly how much, but it's small from a percentage standpoint. There's a trading allocation that's separate to this, so that also plays a role. So it's more closer to 10% when you consider trading positions in accounts. But my point is, I get a lot of people saying, how the hell am I going to make money if I just allocate 10% of what I have? That's just ridiculous. Well, look, everybody's in a unique and different position. I've worked for 25 years. I have my family. I have my assets. I have a pretty broad allocation to different asset classes. For me, I'm not necessarily looking for, an absolute crushing grand slam home run at this point. I don't need to. But not only that, again, a 20x, from a 3,000 entry, it's more like a sort of a 40x opportunity. Even at a 10% allocation with 40x, you're still talking about a 400% growth in your portfolio. So if you have a substantial or significant portfolio to begin with, and you're looking at growing that portfolio by 3 or 4x, you only need a 10% allocation to do that. And you can, if you have a reasonable allocation, you have a much better chance of sustaining and staying in the market when you do see those $1 to $3 and $5,000 daily moves, and then later on towards the end, those $10,000 swings. If you are completely in, everything in, or you've borrowed money because you think this is it, this is your one and only chance, you're not going to be able to do it. I'm sorry. Some of you, very few of you, think you can, and maybe one or two of you could end up executing correctly. But when you have everything on the line, it's impossible in a market with such extreme volatility, with such extreme gains, to hold and execute and get the best price in the end. I'm telling you, I've seen it too many times. But that said, maybe I've been a little too rigid in that allocation number. If you are, for example, and these are just generic ideas, if you are a college student and you're listening to this and you're saying to yourself, well, I've got $4,000 saved in an account. If I allocate 10%, it's $400. Look, maybe in your case, you have a whole life ahead of you. The $4,000 may have been, maybe your grandfather gave it to you, or maybe you worked a summer job. You know what? Okay, you can risk all of that. What's the worst case scenario? It's a summer of work that you lost. I see the potential there, because going from 400 to maybe 8,000 at the top of the bull market is not going to be anything significant for you in the end. Whereas go from 4,000 and go to 60 or 70,000, that's significant. So, and maybe you're in your mid-20s and you've been working a few years and you've saved $10,000 or $15,000. So maybe the right allocation for you is 50%, right? Not 100% like the college student. Maybe it's 50% for you, because you've put some sweat into that 10,000 or 15,000 that you've saved at this point. It may represent 2 or 3 years of savings. You don't necessarily want to risk all of that. My point here is that I can't give an allocation that's correct for every single person. I can only tell you what mine is, and maybe it is higher for you as well. And then altcoins. People are asking me right now a lot about altcoins, and I've told you from the beginning that my view here is Bitcoin. Bitcoin offers the best, and easily the best, risk-adjusted opportunity, meaning that when you look at the universe of coins and tokens and projects, there's 4,000 or 5,000 possibilities. Bitcoin is, in my opinion, the one that's not guaranteed to go up. But if the entire space is not going to go into a bear market, if we are going into a bull market, then Bitcoin is 100% going to be part of that. It's going to lead. Now, it doesn't mean it's going to outperform everything else. There's going to be a lot of projects, a lot of coins that will significantly outperform Bitcoin. But my point is that unless you buy all of them, which means you're just going to average out the whole market, and that's not going to work for you. If you think that which project is going to outperform Bitcoin by that significant amount, then I think you're drinking the Kool-Aid, you're looking into white papers too much, or you're just following a group of people, and you've just bought into that narrative altogether. You may get right. You may end up betting on that right horse, but it's not because of your skill. It's because mostly it's luck, okay? There just isn't any real adoption out there right now, and I don't care if another project has the fastest transaction speeds, or the most secure, or the most private, or whatever the narrative is. Everything has a narrative to cling on to sell to you. The point is that from an allocation standpoint, Bitcoin is the surest path if this is all going to succeed, and the gains are great. The gains are great. People, assets in general will increase by 10% a year. We're talking about something that's going to go up, if this is all right, 2,000, 3,000%. And people still not happy with that. They want the big absolute killer. They're not going to be able to hold that anyway. If you think you're going to hold those gains, you're fooling yourself. But you have to also bet on the right one to get it right. Now, if you're still not convinced by that, then do yourself a favor. Maybe take 10% or even 20% of this allocation and go play around with your coins. Maybe pick 5 of them and allocate, let's just say 4% of the overall pie. So if you have $100,000, you take 20,000 out of that. You put 80,000. Leave the 80,000 in Bitcoin. Put it in a wallet, so you don't, a hardware wallet, off insecure place. Take the 20,000. Maybe pick the 5 best projects you like, and put 4,000 in each. 4,000 equivalent dollars worth, and hold that and focus on hodling those coins as well, and let's see what you do. Let's see if you can get something out of it, and that hopefully will satisfy, or could satisfy, that desire that you may have to trade in some of these. But I think, again, you need to look deep into the soul and realize, what is the attraction with these? It's not the project. I bet you 99% of you don't really deep down give a crap about that white paper or that project. It's not going to change the world like you think it is, whatever it is that you believe in. It's really about greed and money. It's really about you thinking that by buying that and believing that narrative, you're going to get so filthy rich, it's not even funny. And that's just not the way to approach it, obviously. So be real with yourself. Just admit and acknowledge why you're doing it and why you're believing in that, and then go and give yourself a right allocation. Now, again, if the chances of picking out of the 4,000 projects, picking something that's going to outperform Bitcoin is very low, maybe it's 10%, maybe only 10% of the 4,000, which I don't think is even the case. If only 10% of them outperform Bitcoin, then you've only got a 10% chance of beating a Bitcoin allocation. So maybe even if you do 5, you're not going to have a chance. Maybe you pick 1 or 2 only because you really believe in it and you stick to it. But again, if they're going to outperform Bitcoin, then why do you even need such a big allocation? If they're going to do 10,000 or 50,000% gains to Bitcoin, or to the dollar for that matter, then you only need to risk 1 or 2%. It's a massive, massive call option on that project. You don't need more than that. You're not going to be able to hold it. You're not going to be able to do anything with it. You're going to puke, meaning you're going to sell it the second it goes way too high, and then it drops back considerably. You're just not going to be able to hold such a position. So take a smaller one and be happy. And then security, Multi-Sig. So I'm finally done with this. This is not a sponsorship or an endorsement. I actually paid for my own service, but I use the Casa Keys security, Multi-Sig security solution. I signed up with them, and I have a 3 of 5 Multi-Sig solution. Essentially, I have 5 different wallets or hardware wallets that secure the Multi-Sig transaction. Need 3 hardware wallets to unlock any transaction. Those wallets are in diverse geographical locations and in secure locations. So I feel very, very confident now from a security standpoint that I have the right solution in place. It's a little bit of a hassle to move funds around, but then the whole point is security and not something that I'm going to be moving around often at all. When I'm ready to maybe make some sales in the future, and I think price is coming up to that point, then it's easy to initiate the process on one device, and then when you get to the other device in a different location, authenticate and authorize that transaction. But I encourage you to make sure that you take a look at security. I'm not here to talk about Bitcoin security. That's not my place. I'm not qualified enough to do that. I'm a hobbyist more than anything else. But look, please, at least get your keys. Get your Bitcoin off these exchanges. Get them onto your own keys, onto your own hardware wallet that's secured. It's in a safe place, and obviously the seed is stored securely and in a safe place as well. I definitely encourage you to look into that more. If you have a significant amount of assets tied up into Bitcoin, look at the look at Casa as one example. Again, I had a good experience with them. I certainly would recommend them, but it's not something I'm endorsing directly. But it's worked well for me, and I like that solution, and I encourage anybody to look at multi-sig as a option for you. In closing, looking at the monthly chart on Bitcoin, and this is the secular uptrend I've been talking about. It has been one nice big secular bull market at this point with our 4-year cycle lows. As you can see, during the decline into a 4-year cycle low, we even get 10-month moving average, so 10-bar moving average moving lower. But because the monthly chart is much more smoothed out here, we see the 10-month moving average only ever change during the tops and the lows of every 4-year cycle. So we now have a 10-month moving average that's firmly higher. We're back above it from a price standpoint. So if we're looking at this cycle or we're looking at this cycle and expecting to see another similar cycle, doesn't have to play out the same way. This here tells us now that we are into that stage now. We are beyond and coming out of probably the accumulation phase, and we're going to begin to get, and we are entering into that more of that awareness phase here, and that we should not, we've broken even on the 10-month bar level, that retracement back to the mean level. As I said earlier in the video, getting back below this point here is too much separation between the 10-month moving average and where we are now. That would also turn the 10-month moving average lower again. And to me, this is a big warning sign in a bear market if we get below that level. I don't see that happening. What I see from here is what I outlined a year ago and in subsequent videos. I think we begin to make a run over 2020. I don't see us exceeding the December 2007 highs this year, although it's a possibility. But looking at a move higher into December, maybe we test that level in December, maybe we test it again in February, and maybe it comes until the spring of next year. I just don't know. Again, I'm not trying to time the week-to-week and month-to-month action. The point is here that it's a smooth move higher. Eventually it gets to 20,000, and when it breaks free, then you'll see a steepening of this rally, and it's similar to this line here and similar to previous moves and similar to other asset classes that make all-time highs. Once they're free and up into this sort of blue sky area of a new all-time high, they're freed of any restrictions. You get a lot of capital flowing back in. FOMO obviously goes to a next level, and this is where I think we then peak at some point towards the end of 2021, which is the highs. And then again, I don't know where that peak is. Nobody can tell you where that peak's going to be. We could have a .com 1999 2000 generational blow off top in crypto and Bitcoin that results in a 5 or 6 year bear market. I wouldn't be surprised with that. In a scenario like that, we may get a ridiculous peak right at the end there. Okay, or we may get something a little more subdued. We only get up to this, the $100,000, $120,000 level. I don't know. That's not important right now. What's important is that we have our allocation. We're early. Look at this. If this is the plan, and this has always been the plan, if the plan is to get up and sell in this area, at least some of it here, and sell on the way up, then you have to be prepared from here psychologically for all this here, and be ready to take. Take your holding and your allocation up to this level and have it in one piece. Okay, well, a little bit jumbled here today, I think, speaking sort of freely more than anything else. I mean, there's not much more I can really say. All the videos over the last year have said everything I've said today pretty much in a different way, in a different context. The point is, stay focused on your emotional state, stay focused on the goal, and just stay focused on price action here and the target, and stop worrying about what you hear and what you see elsewhere. This is the goal, this is the plan, and if you have a plan, at least if the market goes accordingly, then you have the plan to execute. Without that plan, it's going to be very difficult to be able to ride and execute on a market that performs like this. Thank you very much for being here. If you want to like and share and subscribe, I would appreciate that. Otherwise, leave me a comment if you like. But thanks for being here. That's all I had for today. All the best and be well.